Now, let's go to the next slide. How a top becomes support. Assume a stock is bought at point A, all right? So, over here at point A, you buy a stock at 10, okay? Now, the stock runs up to point B at 15 and you sell it. You just made 50%, great trade, okay? You like the stock, you like the name, that's a good trade, right? The stock fades off to point C, $12. Now you like it even more. You're like, hey, I've been reinforced in the fact I bought the stock, I made money, I sold it at the peak, it came off to C. I'm reinforced in the fact that I know how to pick stocks. This is great, I love this stock, it looks good. Now it trades from C even higher, it breaks through 15 and trades up to 18 at D. Well, now how do you feel? I sold it at 15, it went to 18. I wish I didn't sell it at 15. Now you don't feel so great about it, right? But you sold it at 15. Most people psychologically will not buy that stock at 18 now. No way. Experienced trader will, but no way. If that stock that made a top at 15 that's now at 18 trades off to 15 because you've had a positive experience with the stock, because you've seen the stock has the ability to break 15 and go to 18, when it comes back to 15, you will buy back in. That's the creation of support at a top from a stock that's coming down. If there's high volume at that top, at point B where you sold it, if there's a big volume bar there, it means a lot of people sold it there. That means after they've seen the stock they've had a positive experience with and they like because they made money on, after they've seen, oh, it goes to 15, it's good. Good company, they make a good thing and everybody wants to buy this good thing. And then it goes to 18. Well, now they know it can go higher. Like, oh, well, it went to 15, I was surprised. Man, I think it went to 18. Maybe it went to 20. When it comes back to 15, they're perceiving it as a bargain to buy back into this stock that can go back to 20. And they want to make that not 10 to 15, they want to make that 10 to 20. Okay, so these guys who sold out at 15 are called sold out bulls and they're dying to get back in. They will get back in at that 15. They will want to buy it even a little bit cheaper. They get back at 14 or 13, they're even happier. I mean, if the guy sold it at 15 and bought it back at 12 and it went to 18, you know, booyah, nice trade. But this is called tops are support, and that's why. It's psychological. People want to feel good about their decisions. And when you have volumes at tops, that's more people that want to feel better about their decision, and they'll say, I'll buy it back when it gets back to 15. My dad does this all the time, drives me nuts. I'll buy it at 18 because I think it's going to 20. I'll buy it even more when it comes back to 15 on support. If I buy it at 18 and I buy it to 15 and it comes back to support at 15 and it breaks 15 and goes lower, I'm selling it all. I'll take the loss because it's broken support. Tops are support. Let's go to the next chart. Next. Look at all these tops. It's going to take a while on this one, huh? Okay, first you had some shelf tops. This is the tops of a trading range, basically, all the way over here on the left. Okay, so we got a blue line, shelf top 1. When shelf top 1 was broken, went to top 2. When it bounced off 2, it came back to 1. Now this chart is a good example of what I've been talking about in the other lectures, that stocks don't go straight up and don't go straight down. They move in waves. A healthy stock going up will have higher highs and higher lows. And you can see in this, on this chart of Sempra Energy, top 2, top 3, top 4, top 5, each of the tops is higher. Now the lows coming off of these tops are also higher. This is a very healthy uptrending stock, you know, until we get to the top, but hang on a second. Top 2, stock trades higher than 1, comes back to people that might have sold out over here or even down here, see it come back and they buy it and it acts as support. It comes off of 2, it sells off, it hits support from top shelf 1 and stops its down move and it heads back up again. Then it goes above 2 and it rolls over because it's a wave-like up and down pattern of emotions, and it comes back and top 2 acts as support. And then this thing trades up to top 3 and so on and so forth. We've got top 4, top 5, top 6, top 7. These things keep acting as support, even up all the way up at 7. Even if this stock has run from 46 to 62, the stock traded to 66 and it came back and 62 was still support. If you had owned it through this uptrend and you noticed that every time the stock's moving up and you're happy, right? So the stock starts to sell off and you're a little bit, uh-oh, what do I do? You know, I've already made a couple of points in this. Should I sell it? If it comes down and hits that previous top, It's like, okay, that's fine. I can do that. I'm not too excited. And it bottoms out on that top and goes higher. Beautiful, man. It's acting like it should act. It's a very logical stock, and it's a beautiful stock. This was a nice run. And then it goes up and goes higher than the previous top. And then it comes back, and that previous, and that higher high, that was the one that was just the one before, is now the top it comes down and hits. You're watching this as it's going, and it's working great. Okay? Went all the way to its high at 66. Came off. It held top 7. It went up, but it didn't make another higher top. It came down through. It broke through 7. Uh-oh. Now we're in trouble. See how fast this stock dropped once it broke through top 7? It had been holding tops for months. The second that broke through top 7, bang, 62 to 56, 56 and a half in 3 days. It's because everybody was watching these charts. Trust me, more people use this than you think. They go, uh-oh, no longer tops are holding as support. Get me out and get me out now. Okay, so you had that selling in here. You have a whole bunch of people lasting out to rotten egg. Okay, it came down and held top 6 eventually. Then it had what's called a pullback. And what happened? Here's your change of polarity principle. Top 7 was support. Once pierced, becomes resistance. So you actually had a chance. If you held on to this stock for too long, you broke down through support. That it was the support established by top 7. It broke down, and everybody ran out the door, last one out to rotten egg, and you were too slow on the trigger. You actually had a chance on the pullback when it comes back up. Now, this is what a lot of people will do. They see that big drop. Now they're pissed at the stock, especially if they bought and they're in a loser because they bought it high and late. It breaks through top 7, comes plunging down. I didn't get out. I don't like this stock anymore. Or I'm holding a loser. I didn't make as much as I made before. But then you have the pullback, and it goes back up to the level of 7. And you don't sell it because now you're greedy. Oh, yeah, this is great. Everybody else sold. I held on. I'm, doing great. And it halts there and rolls over. You better get out fast because the market gave you a pullback. A lot of these patterns will give it to you, and it can get you out at a good price, but it won't get you out at a great price. And don't think that all of a sudden, oh, it's going to go even higher. That's the change. Top 7 is the change of polarity principle. Support broke. It went down. 6 support held. It had a pullback to 7. It had 2 pullbacks to 7. And then it rolled over. Let's go to the next